Markets have entered a period of uncertainty as the emergence of the Omicron COVID-19 variant turned investor sentiment on its head and equity markets into the red. Megacap technology names were no exception, and Meta Platforms, the owner of Facebook, saw its stock price fall by 8.99% last week as the stock printed a fresh 6-month low of $307.20. Despite, or perhaps because of that sharp drop, Swiss bank UBS resumed research on the company with a buy recommendation and a $425 price target, saying that it believes that the worst of advertiser budget cuts are now behind Meta Platforms. It added that new content creation and sharing initiatives will open up new e-commerce opportunities for the business. Amazon's stock price also fell last week, but the fall is somewhat surprising because Amazon benefited from lockdown and working from home as e-commerce became the dominant form of consumer activity during that period. Amazon Web Services has won a new customer, with EV startup Rivian choosing Amazon as its preferred cloud computing provider. Amazon will run analytics and machine learning software aimed at optimizing Rivian's production and delivery capabilities. Amazon, of course, is a 20% shareholder in Rivian Automotive. Apple avoided last week's sell-off, and the UK's Financial Times newspaper believes it knows why the share price has risen despite reports that iPhone demand is falling. The paper highlighted unusual options trading activity in Apple, which it says shows that retail traders, who swap trade ideas via social media, were taking bullish bets on Apple via the derivatives market. The idea that a $2.6 trillion company could become a meme stock might seem odd. However, options market makers tend to hedge their exposure by buying the underlying stock of a company that they have sold call options over. The more call option buying they see, then the more of the underlying stock they buy in a process known as gamma hedging. Another stock that has benefited from consumers spending additional time at home is Netflix, but the firm has suffered a loss in the courts as it appealed a ruling about the poaching of executives from 20th Century Fox. Elsewhere, the CEOs of 11 European telecoms companies have called on tech giants, including Netflix, to help meet the costs of funding their networks, which need continual investment to be able to carry video streaming and other data-intensive services. Alphabet's Google and YouTube business were also targeted by the telecom CEOs, and that may have helped to push Alphabet's stock price down last week. Google also took the decision to delay the return of staff to its European, African, and Middle Eastern offices in light of the Omicron COVID variant. Having recently launched its Pixel 6 phone, Google will also move into the smartwatch market in 2022. It seems that just like the Pixel 6 phone, the Pixel Watch will be manufactured in-house. The Pixel Watch is likely to contain fitness tracking capabilities and may even integrate software from Fitbit, which Google acquired for $2.1 billion earlier this year. The global smartwatch market, which is dominated by Apple, is currently worth more than $20.64 billion per annum, but is expected to reach $96 billion by 2027, and Alphabet wants to secure a larger piece of that pie for itself.